Thank you, Zarar. Thank you, Ikram Sahab. Um, Greatly appreciate Pathfinder Group's invite, and it's a real pleasure to be here this afternoon. Um, I think I'll keep it brief and short. I don't know what your format is, if you're going to get into a Q&A,
We will.
and okay. So I just want to probably mention two or three things. One is you mentioned the fund. On the back of that, over the last sort of 12 to 14 months, we have moved and made significant progress in terms of macroeconomic stability. It's evidenced by various matrices, which you have all seen, whether it's our FX reserves, which had dipped down to 2 weeks of import cover. They are a little over 2 months of import cover. We have a stable currency. We have gotten to a situation with respect to the twin deficits, which have been the bane of our country for the longest time. After a very long time, we have a primary balance on the fiscal side. The current account has been positive over the last 5 months. It's on the back of very strong remittance flows and also the exports. And the good news about exports is that we are actually diversifying. The number which has come in terms of IT services in December, $384 million of IT services export is an all-time high for the country, and it bodes well in terms of how we take things forward. Um, the institutional flows are back, both in terms of fixed income investors, although now given the policy rate coming down and the arbitrage opportunity going down, some of that is going back again. Uh, we see flows on the equity side as well. So the stock market is at all-time high, although much more to do over there as well. We did see some ratings upgrade in terms of the sovereign rating over the last few months. Uh, Inshallah, as we stay the course, I'm quite confident that we will see our move back into the single B category over the next few months, inshallah. Um, Now, this is all around the macroeconomic stability, and I keep on saying, and I know you are talking about digital tomorrow as well. That this is the foundation. This is the bare minimum that any country can do to get their macro stability in place. When you have something like that, of course, there, especially for foreign investors, what we can do is what we did back in May and June. All the stuck-up dividends and profit repatriation and remittances, close to $2.5 billion were paid between May and June of last year on the back of the stability that we had, so that we could get into this year on a cleaner slate, and hopefully not to be repeated again. Uh, the other thing is, with respect to the fund discussion, I think there was really two things which we decided under Prime Minister Shehbaz Sharif's leadership right away, that we have to, on the back of the 9-month SBA, that we have to get into an extended and larger program, really for two reasons. One, to bring permanence into the macroeconomic stability, and the other is to execute structural reforms. And Now, as far as these structural reforms are concerned, all of you have covered Pakistan, and you've been looking at Pakistan for the longest time, or you've lived in Pakistan for the longest time. We have known the what and why for the longest time. We just don't do it. So there is no rocket science. There is nothing, that we have to go and look for policy prescriptions. And it's fine. Everyone has their views and they want to give their views. But any country which is hovering in terms of tax to GDP, 9 to 10%, it's Econ 101, that we have to start moving it into double digit, so that we can get into Committee of Nations and try to bring some level of semblance in terms of the fiscal discipline. Energy, again, affordable energy, renewable energy, SOEs, the kind of drag these SOEs have had on our exchequer for years and years together. And now privatization. I mean, Qasim is sitting here. I mean, always admired him for the public-private partnership and the leadership he has taken in the government of Sindh, and we should, learn from that discussion and what they have done and put it in practice in Sindh for the rest of the country and certainly in federation. And the last thing is public finance in terms of reducing the size of the federal government, especially after the 18th Amendment. We are still hanging on to things which are devolved subjects. There's no reason that we have to have these ministries. There are 43 ministries, 400 attached departments. Then also around the pension reform. So what we've done is for all uh, civil bureaucracy colleagues, as of July 1 of last year, we have sort of said anyone who's a new joiner will be on defined contribution. So we still have to deal with the stock, and stock is a very large number, but at least we have stopped the bleeding, and it wasn't easy. Similarly, the right sizing of the federal government, since I've been tasked to chair that committee, um, these attempts have been made previously. I've said it in a number of forums that Dr. Ishrat during the PTI administration did a fantastic job in terms of, and I picked up that report and it went into a lot of detail and was presented in the cabinet of June, July of 2019, never saw light of the day. Because when you are trying to go for a big bang approach, it at times it doesn't work, and it didn't work. So what we are now doing is taking it sort of bite size. We are taking 5 ministries at a time, um, looking at the attached departments, making decisions, taking it to the cabinet, taking it to the PM, getting decisions, and then looking at their implementation. So we are now at sort of wave four. So 15 ministries are already done. You've seen some of the ministries which are going to be abolished, some of the ministries which are going to be merged, some of the departments which are going to go away. Um, 150,000 vacancies in the federal government have been abolished. So these are all things which are not in the planning, have already been announced, and we want to cover all of this by the time we get to June. Um, then, so these are some of the structural reforms and what we are trying to do. And the last thing I just want to mention is sort of a road back to the market. Because if we say, this is the last fund program, then there has to be some schematic around it. Because when you get into a stabilization phase, the first temptation is, okay, now let's go for growth. And we have seen it. And we have seen it in the recent past as well. But we also know that the moment we touch 4% in GDP growth, and we have seen it historically, we've seen it in the recent past, because we are in import-led and dependent economy, we get into a balance of payment problem. And once we get into a balance of payment problem, we go running back to the lender of the last resort. And we have seen all these cycles coming through. So what we need to do is to fundamentally change the DNA of the economy to make it export-led. Um, the FDI, you all here, we value all the investment which has come in. We value all the foreign investors. Vion is sitting there, and we had a very good discussion yesterday as well. And the other investment which has come in, whether it's BYD, whether it's Aramco, for the last 5 to 6 months. But we have to move towards an efficiency-led FDI, not market-led. Of course, we are 240 million people. Those people and the middle class is there. But every FDI which comes in has to have a component of producing an exportable surplus, because otherwise we will continue to be in this situation. And the last thing is, of course, accessing the international capital markets. As I said, the moment we go into single B, we try to go back into euro and sukuks, etc. And we are making a very earnest attempt to tap the Chinese capital markets for the first time in terms of inaugural panda bond issue following the Egyptian model. That is sort of the road to market. The homegrown economic plan was outlined by the Prime Minister on the 31st of December. The only reason this time around, I feel it is different because it's backed by sectoral plans. This is not a 10,000, 15,000 type of discussions. There are backup and bottoms-up plans from the various ministries, which are now in execution phase as we go forward. I'm going to stop here so that other speakers can have a chance, and we'll take it from there.